welcome everyone to this first ever, I think, Beyond Blogs debate. As Gabriel announced, it's going to be on the death of an ICO. That's the affirmative position we're taking. My name is Nick. I'm based in Tokyo. I'm with Nikkei, which is one of the global's leading business publishers. Anyways, so on my right side here we have Abasa and Justin and Moafak and Roland on my left side. Maybe it's the best that you guys introduce yourself a little bit, and then I'm going to explain what we're going to do this. Maybe start from Roland here.
Sure. First of all, thank you again, Beyond Blocks, for the opportunity for all of us. Another fantastic conference. My name is Roland. I'm from Hong Kong, but I lived around the world, particularly US, hence my accent. My background by training is in corporate finance law, so I guess I'm the lawyer on this panel. So what I did before my job was I helped financial institutions with all their security structuring, fundraising, mergers and acquisitions, all that kind of stuff from a legal perspective. And looking at that market a couple years ago, I decided to make a jump into venture capital. So today, I founded a venture capital firm called Cocoon Ignite Ventures, and we are a seed stage investment firm investing mainly in consumer technologies.
Yeah, thank you. Moafak?
Good morning, everyone. My name is Moafak. I'm from Finland, and I'm a serial entrepreneur. Never applied for a job, always created my own. Where I spend most of my life is, I think, financial technology. Before it was called fintech. So I was a co-founder of a company called Trema. We were doing trading room solutions for financial institutions, both private and like banks, but also governmental institutions, and also corporate treasury, Fortune 500 companies. So we built a business, started in Finland very small, then built it global, sold it a bit more than 10 years ago. And after that, I started investing in early stage startups, and that's what I do. I'm currently invested in 70 startups, ranging from B2B software, there's fintech, there's ad tech, e-commerce, and so on. And also on the other side, I have a portfolio in gaming, mobile gaming and video games, and that kind of stuff. I think that's the intro.
Justin, we heard it from you.
Yeah, you guys already know me, so
yeah, you heard from Justin in the first discussion with Gabriel. Abasa?
Yeah.
Fellow from Tokyo.
Yeah. Hello, everyone. I'm Abasa. I know Nick from Tokyo, part of the same sort of scene out there. I'm American. I've been in Tokyo for 15 years. Originally, I come from a financial background and then online payments, and from online payments to crypto. Been involved in Bitcoin since 2011, and seen the ups and the downs, and now I run a little startup called Zilla, and we are an ICO marketplace, so I can kind of speak on the trends in terms of ICOs.
Thank you. So this is how we're going to do now. It's early morning on the first day, so we want to wake people up a little bit, shake things up. On my left here is the affirmative camp. So basically, the title is Death of the ICO. So you guys are going to advocate for that. On my right here is the negative camp, or as I call them, the believer camp. So basically, they're going to advocate the opposite. So we're going to start with one person each, setting your position. What is your thoughts and opinions on the ICO and the supposed death of it? Maybe we start with Roland. You got 3 minutes. I'm going to cut you off
Sure.
if you're longer, and then we're going to switch to the other team. Go.
Okay. Well, glad I had my coffee. Get ready for this. Let's be specific here on what we are talking about, at least for this debate, and where I stand. So this is ICO specific, so the initial coin offering, the moment when teams and projects are trying to take your crypto that you've created and using that to create liquidity and funding out of it. So we're not talking about the validity of the crypto market in itself and the kind of post-listing situation, which I take a different view. So ICO itself, well, first of all, by the name itself is already extremely misleading. Initial coin offering. I mean, for a securities lawyer, that's very obvious. That's a play on the IPO, initial public offering, creating a sentiment that, if you have something great and you want to share it with, your users in your open market, you want to offer something to the public. An IPO is the offering of securities, so shares in a company usually. to the public. So you allow the public to participate in the economic upside of your company. And ICO is trying to take the idea to say, well, I'm going to offer these cryptos so you first have an access, a utility value to your company. But let's be honest here, when we're talking about the trading of these cryptos and the fact that there is liquidity and there's volatility, the utility value, while it's still very valid, I think, I do not question that, the intention of people participating in this may not always be all about the utility. It's obviously there to play on the value of these cryptos. So therefore, ICO as a concept is misleading because it's a fundraising exercise. It is a ability for the public to participate in the both economics and utility of a company outside the complete framework of regulations that's been around for decades to really do two main things, which we talked about earlier with Justin. One is market transparency. So you know what you're getting into, you know how, what you're buying, who the counterparty is, all that kind of stuff. And second, most importantly, is minority protection. The idea is, well, once you buy something, and if you're not the biggest buyer in this market, there's a chance that you as a minority can be manipulated, you can be taken advantage of by the major buyers. Regulations are in place to mitigate the effects of these things, lack of transparency and lack of protection for minorities. So where we stand right now today with the ICOs and what we've seen in the last couple of years, because they sit outside this regulatory framework, we're seeing a lot of bad projects coming up, giving ICOs a bad name, giving crypto a bad name, which in my view is horrible because if we talk about the post-listing part, where cryptos are tradable, they are more liquid, whether for utility or security value, that's a great thing for all of us here. But the fact that, we're trying to start this process via a, mostly fraudulent way of raising capital and getting people access, I think is actually slowing down the progress of the adoption of crypto. And so in that sense, what I argue against is the current form in which ICOs are being taken, the lack of understanding of what securities are and how to structure them properly, and therefore making it unattractive to institutional investors and other professional investors to come into this space.
Oh, it's perfect. 255.
I didn't rehearse that.
Yeah, I just told them right before what we're going to do, so they didn't know.
Yeah.
Abasa, N1, your position. Abasa, by the way, not just that you did an ICO, you also have a platform that, among other things, is focused on ICOs, so it's probably the best person here to argue for the N1.
Yeah, and so we did our ICO about a year ago, raised a little bit of money, started our platform, and our main goal is really to help other ICOs raise money. Sure, the ICO, the name ICO is a bit misleading, but that's of no fault to us. Mining is misleading, and look, crypto is difficult, and people, when they invent these sorts of new ways of raising money or new ways of verifying transactions, they come up with names that they feel kind of fit the most and that most people will understand, but it's unfortunate that it gets kind of taken out of context. Especially, we have people who come in from traditional finance or from the legal backgrounds, and they kind of they misunderstand what we're trying to achieve. ICOs is not. Look, I participate in ICOs, and I've been participating in ICOs for a long time, but I've always thought of it as crowdfunding. It's not an investment. It's a way for. It's basically Kickstarter on the blockchain. It's a way for companies to raise a little bit of money that they wouldn't have been able to raise through traditional investors. If you look at like Ethereum, how is a traditional investor going to, first off, invest in Ethereum during their pre-sale or when they're trying to get their network off the ground? And how are they going to make money out of that? Where's the exit? Whereas if they do an ICO or if they crowdfund their project, then it's a bit more feasible for them to be able to a feasible method for them to raise money and to kind of get their project off the ground and seed it with users. So in my opinion, an ICO is basically the most healthy way for blockchain-based companies to raise money. Sure, there's going to be projects that don't really make too much sense or fun projects. But look, when Dogecoin came out, I laughed at that. I was a Bitcoin-only guy back then, and look at what Dogecoin has done. They have a following, they serve a purpose, and they've done pretty well. I think look, on our platform, we have over 350 projects that have applied to do an ICO. We've accepted about 45, 50 of them. And earlier on, I'd say the beginning of this year, we saw projects that were just all over the place and a mess, quite frankly. But now, it's a more difficult market and a more difficult climate to raise money. So the companies that are applying are a lot more. Their business idea is a bit more sophisticated. Their product might even already be out. They're later stage companies. They're Series C, Series D, even Series B stage companies, rather than just a white paper and a couple of guys with an idea. So I see the market has decided, and the market has made it more difficult for these BS projects to thrive, and that's what we want. I think it's a bit early for stringent regulation, where we've seen the market decide and shake out the BS in the industry. Okay. So I think what we have right now is perfect. The market sucks, but the system that we have in place right now to shake out BS projects, I think, is working just fine, and I don't think we need to change a thing.
Thanks, Abasa. The skeptic camp. Motherfucker.
I'm the hired skeptic here.
Yes.
So I've been investing in startups for, I think, like the past 10 years. And I think this ratio is for every professional investor. So every deal you invest in, you say 99 times no. So if I have invested in 70 companies, I have said 6,930 times no. So you need to weed out a lot of stuff to get to the good stuff. And can I swear?
Yes.
Yeah.
So actually, swearing is encouraged.
Okay, so I'm skeptical of bullshit projects. I mean, things that don't actually. I think whenever you're doing like investing in businesses, they're about. You need to look at the basics, the fundamentals. Is there a problem? Someone has a pain or a problem, and you're offering a solution for that, and you're building a business model around that you can make money. And if that's not obvious or evident, there's no basis for a business, and I see no basis for investing. The other kind of lens that I use when I'm looking at investments is actually from Gartner Group, if you're familiar with the Magic Quadrant. The axes there are completeness of vision and ability to execute. And I think with many of these projects you see, there are big visions and kind of like if the world was flat or something, things would happen. But the ability to execute is usually not there. There's so many assumptions that are just not grounded on anything, like factual. And I think these kind of projects give a bad name for the whole industry, I think. And that's why people outside this bubble where we are, outside in the so-called real world, they're very skeptic about this whole thing. And I think you need to weed out this kind of, I think crap is the technical term, to get to really interesting stuff. And I think that's what we've been seeing and why I think the whole market has been going like this. Now I guess it's somewhere there. So I'm not skeptical about the technology as such. I think blockchain can produce something interesting stuff in the future. I think we're going to see loads of interesting things. But I think at the moment we're like 1999. Are you going to invest in pets.com or Amazon.com? Books are dead. Who reads books? Pets, however, is an interesting business. You should invest in that. That's what we're going through.
Don't invest in pets.com, basically.
Oh, take your time machine and consider it actually could make sense. Yeah. Whereas books, no one reads books anymore. Don't invest in books.
All right. Thank you, motherfucker. Justin, how can you support basically your teammates, Abasa, and maybe add something more to counter these guys?
You guys make some good arguments, and now I'm kind of like doubting myself.
They prepared. Okay.
Just kidding. Well, I think first and foremost, there's no real right or wrong answer.
Yeah.
And that's how I'm going to hedge myself with that opening statement. Naturally, if you look back at sort of any new technological innovation, the first form of which is created is never it's going to be its finalized form. So whether it was like the early stage of the tech stocks, right? We had so many companies come out that today don't necessarily exist anymore. Even the little US robotics modem that I used to use to play video games doesn't even exist. And so the first form of what we had in this sort of ICO craze or fundraising round, it's kind of expected, at least, that it would evolve going forward. When I look at some of the projects, I think the guys make great arguments. And even Abasa, you said some of the projects that should not have necessarily been able to access funding, that probably won't happen again. I think people are probably smarter now, or at least I hope so. But also, if you think about like private and public fundraising, the whole idea from a VC to write a check and privately invest in a company versus someone who participates in a public offering, like an IPO or a credit offering, there's a difference because one is regulated and one is not, right? And so that again is what it comes down to, is I think the people necessarily going out there and raising money, they weren't protected, or sorry, the people that are investing in some of these were not necessarily protected. There was no accountability. There's no framework, really. You just create a white paper and say, look, give me some Ethereum, and I'll try to do something and create a project. The crowdfunding angle makes good sense to me. But I think what's happening now is you're having this whole space start to evolve. And you're having people create tokens, which you could call them an ICO, but they're not necessarily raising funds through it. They're creating, and this is some of the phone calls we've had, right, is they're creating their own token to protect an ecosystem that already exists. And that was something for me that I always thought would be a natural progression of this tokenized world, is that if I had a Microsoft, for example, right, to access their cloud, you had to use their token, and they just airdropped it to people. That's a token. You could call it an ICO perhaps, but they didn't necessarily raise any money. That would be an interesting use case where it could continue to exist slightly different form. The other area I think that would be really interesting is a security token. The idea that you could put real estate, for example, onto the blockchain is absolutely phenomenal. For someone like myself who graduated around the time of the great financial crisis, 2008, since then we've had zero interest rate policy around most of the developed world, and property prices, except for in Japan, have really gone up a lot since then. And so having missed that boat and being inflated away is very frustrating. And I think the millennial generation right now, I think I'm on the very tail end of the millennials, but the millennial generation feels that pain and frustration. It's part of the reason that they are looking for alternate means of income or investing, such as crypto assets. And so the idea that you could buy a piece of an apartment in Hong Kong for $50,000 and own a portion of it just by getting a token is really interesting. Something that I think will be continually investigated by intelligent people and investors. And so that form of an ICO or a new token, but it's actually a security token and can be regulated, would be an interesting development that I look forward to seeing how it turns out.
Perfect. So we're going to engage into a little bit more of a free discussion right now to make it more open. I would maybe switching immediately to the position, and I'm sure there are projects here in the room. How many people here are running blockchain or crypto projects here, or working for some? All right, quite a substantial number. So from the perspective of maybe, especially new projects that are starting right now, how do you go about deciding whether you want to do an ICO, when you raise money traditionally? Maybe you guys, I guess you still support the ICO.
Yeah, definitely. I think, it should be a hybrid, right? So if you want to crowdfund through an ICO, sure, do a portion of it through that, but also speak with traditional investors about, raising money through giving away equity. And I would say in order for an ICO right now to be successful, you really have to have your shit together. The project has to be nice. Of course, the basics like the website, the marketing, all that has to be in order. But first and foremost, just make sure what you're doing, there's a proper purpose and a reason. Like I've seen some ICOs that were like, Jesus Christ, like what are you guys doing? And it's almost like it was almost like a game to some people. It's like, how much can we raise off of this BS idea? Oh, we raised a couple of million, great. So we've shaken those out. But if you really still want to raise a bit through an ICO, you can do so. Just be transparent, make sure your project is on point, and that your go-to-market strategy is good, and then you should be okay. And come see me.
So I think Abasa is saying that basically this whole situation is kind of good, and all these terrible projects that you saw around through the Zilla and basically throughout working in the crypto space are actually going to, in a way, purify the system, right? So let's take that argument, and let's assume we move it forward, and now the projects coming in are legit, and then would you consider, Roland, then in investing in an ICO if you have a really good project?
Yeah, so several things. Also to address what Justin was saying there earlier, this panel is called Death of an ICO. I like that name because ICO, it should be the death of that, and maybe the kind of rebirth of TGE, right? Token generation event. We talked a lot, everything that Justin mentioned about the potential of having these tokens, whether, and most likely not there for fundraising, I think is powerful. And so we're separating the access of these assets, to the millennial bunch away from the fundraising part of it. On the fundraising part, which is the question about, the VC role and whether we participate in ICOs. So usually when people talk about the death of an ICO, it's also related to death of VCs. They say, well, with ICOs coming, will VCs still be relevant? Well, kind of going to the point about what the VC's role is. We always say that, we are not just here to provide the check and the money. So funding is actually not the core strength of VCs. In particular, at least the way we look at it, because we're a tiny fund. So our money means nothing really to the entrepreneur. So the job, I think we are all in agreement here that, filtering through ideas and making sure that they pass certain thresholds, certain tests to make the idea valid, the execution solid, is important, and that is really the VC's biggest role as gatekeepers, regardless of how we're financing these ideas. So ICO to me is a distraction to that exercise because we're focusing a lot, at least in some of the conversations, in the financing part of it and making money out of these and pump and dump and all these kind of trading techniques. And you're ignoring the fact that, well, the serious job, the very difficult job, is something that we all agree with, which is filtering out the bullshit, taking projects very seriously and making funding difficult, intentionally so, because you don't want to fund crap. So I think as a position, whether it's funding through an ICO and that process, which I think has a lot more work to be done to make sure we filter out bullshit, versus the ways the VCs do it, which is a bit more conservative, we're not so fancy with the way we finance, is important in kind of improving the quality of these projects, in particular crypto projects.
Well, I thought, some of the upsides and pro sides, often it was said VCs get too much control. If you go to places like Silicon Valley, the hold'em power is really strong, right? So it's almost this kind of resentment now between startups, projects, and VCs. And ICO kind of changed that a little bit. As a VC, basically someone who invests, how do you counter that argument that VCs maybe have too much control and too much power in places like traditional investment?
Okay, I have been a VC. I'm not an active VC at the moment. I'm mostly investing more.
By the way, tomorrow we have a whole VC panel as well, so be here.
Come to listen to me again. No, I think, well, first of all, money is fuel, and it doesn't have, that's the basic function for it, for every project or company. And I think people are too much focusing on these fueling events, especially at least in the traditional startup world, like TechCrunch is writing about how much this and that raised and so on. And it's like going to the petrol station and filling up the tank. There's not much to celebrate about. I think it's much more interesting to focus on solving real problems. And here's a bizarre idea. How about make money by actually selling something that someone is willing to buy? I'll give an example. So we had this Trema, this trading platform we were creating. For the first 5 years of being in business, we didn't raise any external capital. We had 10 million in revenues before we raised any external capital. We were making products that companies like Fortune 500 companies, Central Bank of Thailand, European Central Bank, and this kind of institution, Citibank, were buying, and they were paying money for that. And that's only when, I think 5 years later, we raised money, and that's an alternative way of funding. But going back to the role of VCs, I think VCs, I don't know if it's really about the control. I think typically if I do an early stage deal, I want a shareholder agreement where there's certain provisions like we invest in you and next day you don't buy a Porsche or a Ferrari. Things like that. But otherwise, there's not a lot of control you're really on the driver's seat when you're raising money from whether it's an ICO or from a VC. A dumb VC wants too much control. A smart VC realizes that they're not on the driver's seat. They're investing in a team that's driving and hopefully going really far.
I'm going to take actually one of your arguments and take it to Justin, where he said you have to actually talk to, you reject 99% of startups that you talk, right? And hypothetically, the same would be with ICOs if you would invest in them.
With anything.
Yeah. But from that side, what are still there are projects on ICOs that raised a lot of money that are very legit. They're actually going there. I can think of some supply chain projects that actually have products now and partnerships and clients and revenue. So clearly, in that case, it was beneficial for them. Is it just overall matter of due diligence, where at one point when you're able to do due diligence, it is regulated, then actually an ICO is a good thing, as showed in some examples. Well, feel free to name examples if you know them.
Sure. Well, I think as Abasa mentioned, even in the last year, the ICO process has changed dramatically. Earlier in the year, you had guys just with a piece of paper that could just get a whole bunch of Ethereum. No KYC, nothing, all this kind of thing. That's changed, certainly, and it will continue to change. And on that note, as you said, it's just gravitating towards a regulated market anyways. Like, doing KYC is not required for the most part, I guess, in this space, but it's the best practice, right? So people will start acting in the best practice manner so that they could get institutional capital, or they'll make sure that their participants in the offering are a little more comfortable. And so everything is just going to move in that direction naturally. And so I think on that note, just to answer your question very quickly and bluntly, is that it can exist, but it has to be in the proper framework.
And another point, actually, where you guys both mentioned the token utility aspect, which is not just called utility for the sake of avoiding security regulation. So is that a future to go then in terms of tokens? You kind of both agreed on that side. Do you want to sit on that side now? Or?
Well, I think because we're talking about the ICO part, we're talking about the funding of these projects, that therefore allow for these for the operations of the project and the team to continue and generate these fantastic utility tokens. So to me, right now, the kind of split between the two is extremely unclear. It has been unclear for a long time, because to me, what this is all about is market participation. I mean, the idea of the blockchain, the idea of what we're all doing here is because of the whole concentration, centralization of control, power, all that kind of stuff in previous companies. And now we're talking about the democratization. So the equivalence to this, if kind of why am I thinking the way I'm thinking, is this is just the same as you look at any planned economy in the world, that they close it off for public participation because they want to make sure, when people do participate, everyone has an equal chance. So look at China as an example. There's a reason they shut everything down. There's a reason why the capital markets right now is still quite restrictive compared to, say, the US, Europe, and Hong Kong, because they don't have the necessary systems in place to allow for the equal participation in the economy. So in the token world, before we get to the utility part, which we all agree is very powerful, that utility value comes with it naturally. If it's high utility, a value, sometimes a monetary value, which we want to trade on, and that's perfectly fine. So in order to democratize that utility, in order for us to execute on this vision that we can decentralize certain things, we can all have some participation into the value that we're creating, we need to fix this funding part first. We need to fix the part where we understand what all of us are buying into. We understand, if things go wrong, who do we sue, what the counterpart is, all that kind of stuff. And if we don't fix that part, forget the utility part. We're not going to get that democratization.
Wolfgang, I think you're the more skeptic in this camp as well. Would you invest or consider investing in basically what Justin and Roland said, in a startup that is issuing tokens but not using it for raising money? So they're using it as a utility for their system. Would this be something that you would consider, at least?
Well, it depends on what the utility is for. I mean, it's again, I'm a broken record. It's about solving real life problems. I invest in real things. Like if there's a real problem identified, which opens a huge market opportunity, obviously yes, you can build a business around that. And whether it's a utility token or a security token or just, I don't know, plain old real money, it doesn't really matter for me as long as there's an opportunity that you can capture and you have a smart team building something to capitalize on that. Sure, why not? I think I haven't seen many of those. I've seen a lot of the other stuff.
Same question to you, and also follow up on Zilla. What is your position? Do you do all other tokens, not security tokens? What do you guys
Yeah, well, we only handle utility, quote unquote, utility tokens, but on Zilla. But I can tell you some trends. In I guess about 6 months, we had just under 400 companies apply to list on Zilla. The types of companies are changing, but I would say over the past month and a half to 2 months, we've seen many projects put their funding, their ICO funding, on hold, just because of the market downturn. So I don't know if ICOs are dying per se, but they're definitely slowing down. And crypto changes very quickly. So what will emerge from that is still kind of a question mark in my mind. And will that recover with the market recovering? I'm not quite sure. From the very beginning, we've thought, okay, we can't really put all of our eggs in the ICO basket. So we're diversifying a bit. Really soon, we're launching, as part of our app, we're launching a platform for events, actually, like this. So you can pay for event and get event tickets in crypto on our kind of our simplified UI in our system. And actually, you get what we call point coins. So point coins are like loyalty points for events. So if you get tickets through our platform, you automatically get point coins sent to your wallet, and those point coins have another utility, right? So this isn't an ICO, but you can come to the event. When you visit a booth, they give you point coins, and maybe there'll be a giveaway at the end of the event. They'll give away some mining machines for people who have the most point coins and things like that. So I think the utility is changing. I'm seeing projects that have slightly different utilities. And we've also, I don't know if you guys are familiar with Fcoin. Fcoin was an exchange where they did something called fee mining, whereas they charge normal. They didn't do an ICO, but they charge normal fees, and in return for those fees, they give you their token. So in a sense, they raise money through charging fees. But I think the quote unquote ICO is changing. It's evolving, but it's not dying.
Time is slipping quickly. Justin, maybe from your perspective and working with institutional clients and stuff like, what is the atmosphere there now with the ICO in terms of, we work closely with corporates, and I know that some of them know more and some of them know less, but I wouldn't say they know a lot about it. But they try to move into space, obviously, because they see things are happening. You surely work with them much closer on that topic.
Yeah, so we don't do anything directly with ICOs per se. Like, we're not an ICO advisor, and we don't market make their tokens. If they raise money, they can come to us and liquidate or trade their Ethereum for fiat. So that's our only exposure to them directly. I think a lot of the people, again, that come from the institutional world, they'll look at this space, and the most important thing is applying a framework. I can't stress that enough, is they'll look at it and they'll say, oh, there's no accountability. Oh, there's no recourse. Oh, I don't know if I send this person Ethereum that they're going to actually do what I say, or they're going to sit on the Ethereum and speculate it on it rather than convert it to fiat to run their business. That's a big thing as well, right? When the height of the ICO craze was sort of when Ethereum was above 1,000, a plethora of people raised capital, and then they weren't quick enough, or they chose not to convert that to fiat, and now we get to see a lot of that flow, and so they'll be liquidating those cryptos to us at unfavorable prices, and so that affects the ability. So I would imagine for someone like Moffett, like if you're giving someone money, you want to know that they're using it in a responsible way to build that business, right? And getting equity in the company is another way of being able to participate in that upside. I think for the ICO world, going back to the question you posed to Roland earlier about sort of a utility token. If one were to participate in a utility token, it's because they want to access that ecosystem. It's not because they think it's going to fly to the moon. So understanding the priorities and why someone is conducting an ICO or fundraising through an ICO or creating a token, and then the participants allocating their capital and participation, making sure that's aligned. And I think that's where there's been a big disconnect this year, is that, as I said earlier in the previous fireside, is that there's a lot of quote unquote easy money in front of people, and they look at that, and unfortunately, human nature gets the worst of them in this situation. If it was end of last year, it would have got the best of you. But it gets the worst of you, and then you just get sucked into trying to make quick money. And every trader knows that there's no such thing as easy money in the world. It's tough. And so I think setting up a framework to make sure that the ones who are conducting ICOs or TGEs are accountable for their actions, and then also for protecting the participants from themselves is actually really important. So both of them need to be in place, I believe, for this part of the market to continue to evolve. And actually, one of the questions I wanted to ask Abasa is, what have you kind of seen in the last, if you don't mind Mike jumping in here, what have you seen in Zilla in terms of like the quality of not just the underlying project, but the way they design their TGE, like whether it's the white paper, accountability, KYC, like how has that changed over this year?
Yeah, that's
maybe jurisdiction as well.
Jurisdiction,
Jurisdiction-wise, I mean, Singapore, Switzerland, Malta, still very strong. The way people structure their ICO or TG or whatever you want to call it is, you know, there's not a lot of education. There's no framework. There's no model for how to do this. So people have kind of gravitated towards these advisors, these quote-unquote advisors. There's too many of them. You know, anybody can be an advisor. Anyone can change their LinkedIn profile to blockchain advisor and take a few percentage out of your ICO and do a shit job. And that actually is, I've seen that happen. That's the norm. No one knows what they're doing. It's the blind leading the blind. We've actually created a free guide for people just because it's hard dealing with a company who doesn't know what they're doing, that thinks they do, and they're not following best practices. So we said, okay, here's a guide. Here's how to do it, guys. Because
it's kind of easy to spot those, right? If you look a little bit, I know it's harder, Didi, maybe in the crypto world, but it's actually, if you're in the space like probably you guys, it's kind of easy to spot which people are doing things properly and which people are not doing things properly, right?
It's pretty easy for me to spot, but you know, it's hard. You know, an ICO, conducting an ICO, so from this side of it's very difficult. Long hours, you're figuring everything out yourself. So it's very easy to gravitate towards someone who says they know how to do it. Just give me a percentage and I'll run it for you. So that's actually been a very big problem.
Cool. We're really running out of time here. At some point, they're going to kick us off the stage. Well, now we're going to do an even more interesting exercise. We're going to switch camps for a moment. Ooh. So here is my pro ICO team. This is my against ICO team. So just a closing argument, a few sentences from both of you. We can start with Roland. We can start with the motherfucker now. Why are ICOs great?
It's a great acronym. I like 3-letter acronyms.
You have a minute? It's okay.
No, but here's a bizarre thought. People are always measuring like how much they're raising, and the more is better. And I don't actually believe in that. If you've ever been in a startup or company building something from early stages and seeking product market fit, too much money can be actually really bad for you because it makes you lazy and you start solving problems by actually throwing more money at it.
But sometimes it works, right?
Not always. Yeah. When you're seeking product market fit, it's actually good to be frugal. You focus usually on the essentials. When you find the product market fit and then you want to scale, that's when you need more fuel, but not necessarily in the very beginning, the early stage, when you have a small team trying to really figure out what we're doing.
So I think your argument here is the ICOs are great because at this moment don't give you too much money, which makes you focus on product market fit.
Indeed.
Justin, why are ICOs bad and why are they dying if this is the death of an ICO?
Yeah, I think you know, the major problem with them again is the lack of accountability. Too many people have raised money that probably should not have raised money. Whether or not they had an idea that sounded attractive, you know, there's just no idea to know what they actually have done with that. And I feel a lot of the people in the space that participate in ICOs probably feel a little bit cheated.
Nice. Ron, the greatness of ICO and the survival of ICO counts on you right now.
I'm all about the open market. I'm all about capitalism, access to all, democratization of wealth. So if ICO, as it evolves, is one way of doing that, then I'm all for that. But the prediction would be for now. ICOs die. Easy for regulators to come in and chop up all those projects. We already see 2 in the SEC looking at the US. So regulated exchanges, custodians, money managers getting into the space that will then improve the later offering of tokens, I think is a positive towards creating this open democratized market.
Creative destruction.
Possibly.
Abasa, why are ICOs terrible? Why are they dying?
Well,
As who started as an
I
ICO
think
platform.
we've seen too many companies come in with an unproven business model, and they raise too much money, and they're not able to get product market fit despite raising $100 million. All those projects last year that we saw raise $80 million, $100 million, where are they now?
Cool. I think overall, to summarize this, is we kind of out of time. Tokens are, I think, here to stay. It's an interesting concept, at least what you guys said. Maybe ICO is not the right way in the future to raise money, especially if it's not accountable for. And of course, it's basically a summary of also every crypto panel in the end. It's we need more in structure, regulation, and infrastructure, which eventually will come. Tomorrow we have a regulatory panel as well. The regulation is really hard in this space because it changes so fast, right? So what is it? It's today, it's not what it was 3 months ago or 3 months from now. To conclude this, I think we can just have a quick vote. So remember, this is against ICO, the death of an ICO team. This is the survival of an ICO team.
So the T-shirts and the suits.
Yeah. Oh, nice one. I should have wore a T-shirt under my jacket. Who here thinks the ICOs are, as we know them from past year, and people raising a lot of money unaccountably for, or raising money generally for crypto projects, are dead? I wish I could count exactly. And who thinks they are not dead, they're going to stay around just in a probably a little bit better format? Oh, it's a 50-50 split.
That's an even split.
Yeah. Like,
We all win.
yeah, we all win.
Yeah.
I think you guys are a little bit maybe lucky, because if this was a last year event or 9 months ago, like you would lose overwhelmingly and people would throw things at you or something.
I said the same thing a year and a half ago. I was booed off at a different conference. You're absolutely right.
There you go. Awesome. Thank you very much. Please give a big round of applause to our panelists.